Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VITESSE Energy INC quarterly report. VITESSE Energy Inc. offers a range of businesses and services including acquisition of oil and natural gas properties, development of non-operated oil and natural gas properties, production of oil and natural gas ownership, of working interest and royalty interest in various properties across the United States, management of properties in the Williston Basin, Central Rockies, North Dakota, Montana, Colorado, and Wyoming. And VITESSE Energy, Inc.'s stock price has dropped significantly over the past year, exceeding a 13.22% decline. Several key events have contributed to this negative trend. The company's fourth quarter earnings miss in March 2025 was a major setback, with shares falling over 3% after reporting revenue below analyst estimates. This was followed by disappointing third-quarter results in November 2025, where the company announced a net loss and EPS that fell short of expectations, despite surpassing revenue projections. These events have led to a year-to-date decline of 14.12%, with the stock price trending down by 12.55% over the past year. The technical pivot top on August 27, 2025, marked another significant drop in the stock's performance, adding to the overall negative trend. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in commodity prices, particularly oil and natural gas, as well as higher production volumes. Additionally, realized gains on commodity derivatives and a legal settlement contributing to a higher realized natural gas price also contribute to revenue growth. On the other hand, revenue decline is mainly attributed to a decrease in average realized prices per barrel of oil equivalent (BOE) before hedging, as well as a net decrease in commodity derivative gains. Furthermore, a decrease in pro forma total revenue compared to 2024 and a decline in commodity prices also contribute to revenue decline. Overall, the company's revenue growth or decline is heavily influenced by market factors such as commodity prices, production volumes, and realized gains on derivatives. Net income and profit margins decline due to volatility. The company's net income has experienced a significant decline in the 3 months ended September 30, 2025, with a decrease of $17,843. This trend is also observed in the 9 months period, where net income decreased by $0.169. Furthermore, the 3-month period saw a substantial loss of $323,000. The profit margins have also taken a hit, decreasing by 0.65% from 2024 to 2025. The negative net losses imply that profit margins are likely to be in the red. The primary reason behind these changes is commodity price volatility and derivative contracts, which can impact revenue and profitability. This uncertainty has led to a decline in both net income and profit margins, affecting the company's overall financial performance. The company's financial performance suggests a consistent trend of generating positive operating cash flow. Out of the provided summaries, only one page, page 18, indicates otherwise, but it contradicts the majority of other pages, which confirm the company's ability to generate positive operating cash flow. This consistency across multiple sources supports the conclusion that the company is indeed generating positive operating cash flow. The company's debt level and interest expenses have shown mixed results over the past year. While some reports indicate a decrease in long-term debt from $1,200 million to $800 million, others show an increase in interest expense by 4% from $7,510 to $7,825. Additionally, there are discrepancies in the percentage change of interest expense across different pages, ranging from a 13% decrease to an 11% decrease and even an increase. Overall, it appears that the company's debt level and interest expenses have not changed significantly, with some fluctuations but no clear trend. Management is confident in their business plan, but acknowledges potential challenges from extreme weather events and economic changes. The company's strategy focuses on returning capital to stockholders through strategic acquisitions in the Bakken and Three Forks formations, while also acquiring proved developed and undeveloped oil and gas properties for long-term value creation. To manage commodity price risk, management uses derivatives to hedge against volatility and achieve predictable cash flow. With sufficient liquidity and cash flow, the company is well positioned to fund its capital expenditures and operating expenses for at least the next 12 months. The company has made several strategic moves through acquisitions and divestitures to enhance its operations and growth prospects. Acquisitions include the Lucero acquisition on March 7, 2025, multiple transactions for proved oil and gas properties totaling $33.9 million in 2024 and 2025, and opportunistic purchases of near-term drilling opportunities without specified amounts. These acquisitions aim to expand the company's resources and capabilities. On the other hand, divestitures include a spin-off with no specific details provided. This move is likely intended to streamline operations or focus on core business areas. The company has paid dividends in the amounts of $69.8 million, 2025, and $47.6 million, 2024. Additionally, it has also bought back shares as part of its share repurchase program, with a specific authorization to purchase up to $60 million of common stock. That concludes the financial summary for VITESSE Energy INC. Feel free to comment below, and I will be happy to answer them when possible.